Elaine Kub is our corn and soybean market analyst this week. The U.S. Department of Agriculture believes American farmers are gearing up to plant more soybeans than ever before. In estimates released Friday, the USDA projected growers would sow 89.5 million acres of beans this spring, nearly matching the anticipated 90 million acres of corn. Nebraska is expected to be the third largest planter of corn and ranked sixth in soybeans. The agency's numbers for grain stocks indicated 10% more corn in all positions across the U.S. on March 1st compared to a year ago, and 13% more soybeans. We talked with Elaine Wednesday afternoon and started by asking how markets have reacted to last week's numbers.
Quite quietly, actually. We got the reaction on the day of the report on Friday. The soybean market in particular did fall in response to some bearish numbers, particularly in the grain stocks report. So that's to be expected. But a lot of the times, many years, you'll have a big move on report day, and then the next week the markets will follow up with a continued trend. I mean, that report day will sort of kick off a trend, and that has not happened this year. I mean, fortunately for farmers perhaps who don't have very much sold, fortunately we have not seemed to kick off a big bearish trend after the reports. Rather, the markets just seem to be kind of limping along here sideways, which is good news, all things considered.
Let's talk about a few things from those numbers. First, in grain stocks, what do the numbers indicate about demand?
I think it was a surprise in the soybean usage that to see that quarterly demand, the December onwards demand, fall year over year, which didn't really jive with all of the good export numbers that we saw week to week and domestic, crush numbers. I think the market was definitely expecting to see better demand in that quarterly, or implied by the quarterly stocks report, and to not get that was the surprise, and it was the main reason why we saw the soybean market fall by double digits. That being said, I mean, what can we do from that at this point going forward? I think it's more of just a numbers game and how it has affected everybody's stocks to use tables, but not a major problem as far as demand implications going forward.
I want to talk about acres as well, and if you look at two specific states, Kansas and North Dakota, together they'll plant 1.8 million acres more of soybeans this year, and the shift over the last 10 years, 5 years has come at the expense of wheat. How low are wheat acres right now?
They are the lowest they have ever been in recorded history. I mean, since pre-Columbian times, basically, or at least since the USDA has been keeping track of nationwide wheat acres. 46.1 million acres is the lowest they've ever had. This is just a trend, globally a trend of how wheat can be produced anywhere. The world doesn't have to come to the United States to produce that wheat. And so, yeah, we see these western states, Kansas, North Dakota, South Dakota, even Minnesota, all of those are the geographically the states that have dropped a number of wheat acres and have typically moved to soybeans. But in the Kansas and North Dakota, some of those acres are also moving to canola. I mean, it's an interesting dynamic of how you choose to shift out of it, but the general trend is definitely to shift away from the wheat acres. Absolutely.
One more thing before we get into selling strategies. Let's talk about the current trade environment. How comfortable do you feel right now, both in corn when you look at the rhetoric between the U.S. and Mexico, and in soybeans with the U.S. and its biggest buyer in China?
Right. This is going to be headlines this week with Trump meeting with the Chinese president. And I'd say, long term, hopefully it won't matter because cooler heads will always prevail. And we are complementary trading partners to each other. They, rely on our grain, particularly our soybeans. And we, as American consumers, have learned to rely on Chinese manufacturing. So hopefully long term that will be fine. And hopefully short term, the grain markets or the futures markets will ignore any sort of fireworks that come out of this week's meeting. And I think that should be the case. I mean, we certainly are worried about losing market share in the corn market to Mexico, but on a day-to-day basis, looking at the futures markets, anytime that those headlines have hit, they have not necessarily been reflected in the futures prices. So I think that, I think broadly we should be worried about antagonizing our trading partners. Absolutely, that's not a good idea, but price-wise, hopefully the markets shouldn't be too terribly affected.
What's basis like up there?
Well, not great. And I was going to mention with the wheat situation, that's particularly disheartening for a lot of the reasons I think why the Kansas or the Southern Plains have moved away from the wheat is not even reflected in the price ratios that you see on the futures market, but more so in the basis. Like the nationwide average new crop basis bid for 12% hard red winter wheat is $3.40. That is not very promising, and I think that's a big reason why we're seeing those acres move away from wheat.
Okay, old crop selling strategies, if you have any left, Elaine.
Well, I think that grain stocks report did indicate that there's a lot of corn still sitting around on farms, which suggests it's not necessarily the case that it's not hedged, but it certainly suggests that farmers have been, fallen behind on selling their old crop corn. Soybeans, they've done a much better job of selling soybeans and keeping ahead of that. But corn, I think you've really got to have a plan to make sure that you've got a place to take that this summer and an idea of when you're going to take it there, because it's not, I think that unless we have some strange weather situation arise, which there's no reason to believe that it's going to happen yet, then I think we're in a low price scenario for the foreseeable future, and there's no reason to sit around and wait for $4 necessarily.
Would you get more aggressive with selling the new crop as well, so you aren't in the same situation next year?
Absolutely. Today, it's a good idea to get started with small bits of sales so that you can average your prices out over time, but absolutely be prepared for a summer rally and hit that hard for new crop sales, absolutely.